Good morning. For Traders Exclusive, this is George Kachuk. We're RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. What I'd like to do is talk about the equity markets this morning. And here we are starting the first full trading week for June. And once again, the S&P 500 is trying to challenge its all-time highs. Pretty much at that 2100 level, there's a big resistance band between that 2100, 2132 level. The S&P's probably tried dozens of times over the last year and a half to break through this level. So again, we're looking to see if this is possible. Basically, the market's been in a sideways trading range. And what makes it all the most interesting is the sentiment is extremely negative on this market, despite the fact that market's nearing all-time highs. And also, the fund flows over the last 18 of the last 22 weeks, the fund flows have been negative into equity funds. Basically, that money's still moving into the safety of bond funds. And that pretty much tells you that people still don't believe it. They still don't like this rally. And if you look at any sentiment surveys, still a very bullish, bearish outlook. In fact, the only time the market does seem to do better is not that people are getting more optimistic, but basically maybe just a little less optimistic. And if indeed the S&P can push to an all-time high, this may be what may change everybody's mind, get everybody off the sidelines and into the market. Similarly, so we're looking to see what the S&P 500, if it can get past that 2100 level and past this all-time high of 2132, 2134, right around that area. Now also on the NASDAQ, we're looking to see if it can take out its April high. It was at 49.69. It was there last Thursday. However, the market pulled back on Friday after the dismal jobs report. However, the market did bounce back a bit, and it's bouncing pretty good this morning. And we're right about at that level, in the 49.69 level. If we can close above that level, then the NASDAQ will still have some significant resistance between the 5,000 and 5,200 level. That was an area of heavy congestion last year. So the market still has a lot of work to do, but things are looking pretty good. And the Russell 2000, the small cap index, is doing much better. It was up a little over about 1.2% last week. Took out the 1156, the April high, and it's moving higher. So things like that, looking underneath the hood, actually bode very well for the market despite this negative sentiment. And similarly, if we look at all the S&P major sectors, whether it be technology, the XLK, the healthcare, the XLV, materials, the XLB, industrials, the XLI, all of those are above their 50-day moving averages, even the energies, the XLE. Now, the healthcare sector is still dragged down a little bit by the biotechs. They're still below their 200-day moving average, if you look at the IBB, but still, it is still above its 50-day moving average. So that's all positive. If we take a look at the market breadth, look at the advanced decline lines on the NYSE and the S&P 500, those are also hitting new highs. So again, it's a bit of a conundrum here. We basically have markets looking really good underneath the hood breadth, and yet very bearish outlook in the market. And this may be indeed what may propel the market higher. So how do you play this market? Well, you still don't want to chase the breakouts until we hit some new highs, because a lot of breakouts we see, the stocks tend to break out past the pivot pullback, but they hold up. They're not crashing. So you do want to probably, on your better stocks, be picking up the dips, holding on to them, and see what the rest of the year unfolds for us or through this summer. June's not a particularly good, kind month to markets. However, it doesn't matter. With the breadth looking good, the internals looking good, and with the sentiment so negative, this may be indeed what pushes the market higher. So as always, let price and volume be your guide. This is George Kachuk, we're RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.